Good morning. I think we're live, Mr. Deal.
Good morning, ladies and gentlemen. Welcome to Two Crazy Guys, One Crazy Crypto World Daily Crypto Update. And on my left on my screen, obviously, is Mr. Stacey. How are you, buddy?
Good morning, mate. I'm doing great. I'm trying to hold the wellness factor of the Two Crazy Guys up.
That's right. So in case you can't tell, I still have my special voice on, but it's okay. You guys only get to experience the voice. I get the whole gamut. I get the voice, the chest, the whole kit and caboodle. But which is really bad news for me because, you see, we'll come into the crypto update last night, but why this is bad news for me is just sort of sunk into my head because I'm so sick at the moment with this like Canberra man flu. Don't forget the Canberra.
That's right.
I can't go snorkeling or scuba diving. So I have absolutely no chance of finding my Bitcoin. I mean, that's it. If I had to go mountain climbing, I can go up a little bit before the air gets too thin. But feeling like this, where I can't unlock my ears, I can't breathe properly, I can't even go snorkeling, let alone scuba diving to find Bitcoin. So there's a little hint there what happened overnight.
Mate, you should become a mainstream journalist. You'd work perfectly.
I know. So, Stacey, I'm going to hand over to you because, I've always talked out my voice box for the morning, and that's been a huge effort just to get here. I mean, it's like 15 meters down in my room.
It's massive. I'm sure.
It is, mate. But so's the walk to my room.
All right, mate. I will share my screen, and we shall discuss what's happening in the old crypto space at the moment.
Oh, look at that. It's so good because green is one of my children's favorite color, and there's so much green there. It's green. What do you get when you mix it with red? Is it purple? Green and red? Purple?
Yeah, I don't know, the mauve. I don't know. Look, you're asking the wrong person when it comes to colors, mate. I've got no idea.
So if we just move those columns together, we can have a purple chart. Yay!
I like that. There's a little bit of green here in the last hour.
There is.
But yeah, over the day, the 7 days, man, it's crumbling. So Bitcoin's now down 11% for the day. Ethereum's lost 12%. Ripple's lost 4.7%. Bitcoin Cash has lost 9%. Litecoin's lost 12.2%. Tether's stable, so it just hangs there. Interestingly enough, it's now climbed up to number 6 in the top 10 because of the rest of the coins are losing big time. EOS has lost 14%. Binance coins lost almost 8.5%, and Bitcoin SV still has lost another 10.9%. It's just hanging in there in the top 10, and Stella's at lost 8.5%. Yeah. And if we look over the week, they're not looking much better, right? So Bitcoin's lost 23%. And most of them are in the 20s and 30%. Bitcoin SV's lost 44% in a week.
That's pretty cool. That's a good number.
Well, like I said, as I said Monday, man, I don't know why that coin is even still in the top 10. The sooner that disappears.
That's Bitcoin's name.
Yeah, well, yeah. And we'll do a whole session on Craig Wright, who was the leader behind the Bitcoin SV split, shall we say?
Yeah.
That's just that requires a whole session unto itself. The story of that man is just incredible. So yeah, look, the markets are definitely taking a pumbling, but if we just have a look at the chart, look at it. Let's zoom out a little bit, shall we, and try and get a little bit of perspective. Then as we look here, so on this is the daily chart, and yep, it's definitely we've had a pullback right down. We've now ripped right through the 50-day moving average, which isn't overly good, and we've sort of lost that trend, that upward trend on the daily side. But if we do look at the how much we have actually dropped in this little run here, I think we'll find that we have lost about just under 32%.
Yeah.
Right? And so that's as we saw in the.
If you have a look at that chart, and I'm just looking on yours. It goes back a long way before it dropped below the 50-day average, right? Quite a long way.
Oh yeah, yeah,
And you can see what happened after that last time. Yeah, that's it there.
yeah. So
Then it
that's
sort
about
of stabilised, fell a little bit, but then
that's
the
right,
run.
beginning of January actually.
Yeah, but it sort of went flat, flattish, a downward trend.
Consolidated. Yeah, well, that was when it was bottoming out, right? So
Yeah,
we hit our low in December.
yeah,
And then as it was consolidating and finding its feet again,
yeah,
and then until eventually came good. But
yeah.
look, if we look at the longer time frame, if we go to a weekly time frame, and this thing's going very slow. Right, so we can still see that on a weekly time frame, we're still sort of just hanging in there in terms of the uptrend, but we're
Yeah,
still a long way above
the weekly average, yeah.
the 50 week moving average, right? So
Yeah,
look, this pullback's not at all terrible, and just what happens after a big run. We had a big run at the beginning of the year, and now it's just having a pullback, right? So,
yeah,
and if we went back over and if my charts were moving faster, I'd show you. But if you go back over history, you can see quite often there's where we've had a big run, we've pulled back on average 30 to 40%. So
before the next run.
it's just doing what it normally does, right? But I did mention the other day about Ethereum and the fact that it had been punished quite severely. And if we look at the daily chart there, you can see here that on about the 13th, this candle here, it basically went into free fall and lost 30% since the 13th, right? Now, interestingly enough, I did find a potential reason for this was that Vitalik Buterin
sold some.
Yeah, that's it.
Ethereum, ladies and gentlemen, is so broke they couldn't afford a real photo.
No, that's right. They had to make one up.
Yeah.
So, look, Vitalik Buterin, who is the founder, is the or co-founder of Ethereum. They've done some research, and a programmer within the project has proposed to use Bitcoin Cash, or the Bitcoin Cash blockchain, as a temporary scalability solution. Now, for those for those that are not, and most of our audience probably aren't familiar with what all this means. Ethereum currently has a bit of a scalability issue, right? In that it is generally at around 100% of its capacity most of the time. And while it does its smart contracts very, very well, and its platform for smart contracts is excellent, its scalability is not great, right?
It's slow.
It struggles to pump through a lot of transactions. So they've been looking at a whole bunch of ways that they could make that better. And then interesting, out of the blue, because they've been working on a couple of options, and then out of the blue they come out and say, "Oh, we might just use Bitcoin Cash as an option temporarily," right? So I think that, because that came out on the 13th, and I think that spooked a lot of people, and they've gone, "Hang on, what's going on here?" Right? They've got to use Bitcoin Cash to make their system work. I don't know. That's just my speculation. Could be a bit of, and combine that with the fact that the rest of the market's going down. I think it has scared a lot of people.
Yeah.
So interesting, but then there's another article that believed that the what they call the old fat finger syndrome may have caused Bitcoin to plunge 12% in a few minutes. And,
it's good, isn't it? That reminds me of when that Taiwanese finance minister came out and said that they were going to ban Bitcoin.
Well, yeah.
When he forgot to put, "We are not going to ban Bitcoin," and cryptocurrencies, and didn't realise his mistake.
Just one word. What's one word?
Within minutes, Bitcoin just took a skydive without parachute, and they took ages to recover.
Yes.
Because he fumbled his words.
So this is all around Tether, and as we do mention it quite regularly. So it's in the top 10, and this is this is Tether here, and it's what's called a stable coin. So for those that are probably uninitiated in what that means, the concept of a stable coin, and they brought it out because obviously Bitcoin and the rest of the cryptocurrency market is very volatile, shall we say, as we've found. So in order to help traders with the volatility, they brought out stable coins, and the idea behind them is that they are pegged to a currency, and in this case, Tether is pegged to the USD or
it's very similar to what Libra is going to be.
Yes, so Libra's going to be a stable coin, but it's going to be an average of about 5 or 6 different currencies, right? Whereas correct. Tether is just pegged to the US dollar. That's it, nothing else.
Oh, so you mean Donald Trump in his thing yesterday banning cryptocurrencies while he was yelling saying cryptocurrencies are fake, would say cryptocurrencies except for Tether are fake.
Anything pegged to the dollar, it's that's all good. Yeah. But what it does mean is that when you are trading and you're expecting the say Bitcoin or something to go down, it provides a very quick exchange from Bitcoin to the US dollar. Effectively, it's just a cryptocurrency, but it's pegged to the dollar. So it's very popular on exchanges because it does enable that quick transfer out of a cryptocurrency into a United States dollar pegged currency. So that's the purpose of Tether, right? Now, there's been lots of talk over the last couple of years about Tether and I won't go into all that now, but it's been a lot of controversy around how legitimate it is and whether or not they in fact have all the coins pegged in a bank somewhere, which they're supposed to have, but that's a whole nother story. However, in this case, right, what they're talking about here is that what they have to do is they basically have to mint Tether coins, right? So almost like the real currency. In order to get them out into the marketplace, they have to theoretically have the money in the bank account. They then mint the tokens and they distribute them to the exchanges, right? Yeah. And that's sort of how it works. So apparently, what happened is that there's a Twitter account called Whale Alert. And all they do is they focus on really large transactions and they put it out to the Twitter sphere to let everyone know what's going on. But they actually they noted that 50 million USDT, which is the Tether, so United States dollar Tether tokens, were transferred from a cryptocurrency exchange called Poloniex to the Tether Treasury via the Omni protocol. Don't worry about that. And the account subsequently reported that Tether Treasury minted 5 billion tokens on the Tron blockchain, after which it burned them. Right, so then Tether minted another 50 million on the same chain, burned another 4.5 billion tokens, and finally transferred 50 million Tron-based tokens to a wallet presumably belonging to Poloniex. Right? So in a nutshell, and what the article says here, in a nutshell, what happened was Tether, the company that manages a stablecoin, was helping crypto exchange Poloniex conduct what's called a chain swap, moving Tether tokens from one crypto's tokens blockchain to another. At some point during this process, an employee at Tether accidentally created 5 billion of the tokens, which are supposed to be one-to-one to the exchange value of the dollar, which is what I was talking about before.
Did he accidentally put them in our wallets?
Instead, I don't know, quick see if we've got them. But no, they did actually burn them, which basically means, they removed them. So they discovered their mistake and then burned them. But that process in itself was enough to spook the market going, man, what's happening? Why is there so much, because traditionally what's happened is when there's been a lot of Tether printed, they're expecting or there's a downturn coming because they need the extra tokens, right? So right. A whole bunch of Tether being minted is usually a sign for, holy crap, there's something coming, right? Yeah. So that's interesting.
And that is also a really good example as to why stablecoins should not be classified as true cryptocurrencies. Because
yes and no.
I think it's a yes, because they can manipulate it. A mistake like that, 12%.
Look, at the end of the day, that could happen to almost any, it can't happen to Bitcoin or any of the true proof of work currencies. but it look, the big thing with the Tether is it's really just a trading tool, right? It's all it is. It's a temporary place to transfer crypto. If you don't want to if you don't want to have the volatility, or you're trying to hedge against the volatility, right? That's all it's really there for.
Yeah.
There are other use cases for some stable coins for like merchant facilities.
Yeah.
So if you want to take payment as a merchant for something in a particular coin, but you've obviously then got purchasing costs that you need to deliver on or make payment to, then it's often a good idea to switch to a stable coin, so that you're not susceptible to the volatility, right? So look, the coins have definitely got their place temporarily, but here's the thing: any stable coin that's pegged to a fiat currency is going to be subject to the same inflationary nature as that fiat currency, right? And
very true.
If that currency drops or has problems, then that stable coin, is its value is then going to be reflected along with that.
Yeah.
So in line with that, and talking about the what's happening in the more global macroeconomic sense, and we talked about Deutsche Bank last week, and the fact that they were having major problems, and the share prices was down the lowest it's ever been, and they're sacking about 18,000 people. They're saying that the clients are pulling about $1 billion a day from Deutsche Bank, and so that's really fascinating. So it's going to be really interesting to sort of watch how this plays out. I know they've looked at ways to merge with other banks. That so far has not worked, or hasn't come off. So it's a real concern. And while some people are saying, it's one bank, let it go. The problem with Deutsche Bank is it's the largest derivative holder in the world.
Yeah.
So
that's right.
the flow-on effects to the banking sector will be quite significant if this goes down. Yeah. So we are watching Deutsche Bank because there's a lot of financial commentators that are saying it'll begin to tumble, right? If this one goes, it'll be a domino effect, and there'll be a whole bunch that will go with it.
Yep.
The other bit of news I thought interesting, continuing with the news of the global economy, foreigners are now dumping US Treasuries. It's just, so what have they said here? We've lost $216 billion in US stocks in 13 consecutive months now. Yeah. And of course, China here, its holdings have dropped right back down. So they're going in the southerly territory compared to where they've been. So look, it's really interesting times. And so we talked the other day about negative interest rates, Chris, and you went, how does that bloody work, right?
It pays to take money.
Yeah, so there's actually a policy definition, right? So negative interest rate policy definition, NIRP, actually exists, right? Yeah. And it's on Investopedia, which is a great little place. If anyone wants any general information on investing, Investopedia is actually pretty cool. There's lots of really cool information there. Look, I'm just going to play this. It's only a minute long. But it does help explain the concept.
A negative interest rate policy is an unconventional monetary policy tool in which nominal target interest rates are set below zero. An NIRP means depositors are actually charged to put their money into a savings account at their local bank, as opposed to receiving interest on their deposits. Why would a central bank implement an NIRP? During deflationary periods, people and businesses hoard their cash instead of spending and investing it. Aggregate demand collapses, which leads to falling prices, slowing production, and more unemployment. When interest rates fall below zero, the costs for companies and individuals to borrow falls, which in turn increases demand for loans, investments, and consumer spending. Banks lend money more freely, and borrowers are more more inclined to spend or invest their cash rather than pay to leave it in the bank. Some retail banks prefer to pay the costs stemming from negative interest rates themselves, instead of charging them to small depositors. They fear those depositors will move their money into cash. To prevent this, banks sometimes absorb the loss, even though it means smaller profits.
Imagine
So,
if any of our 4 banks had to decrease their profit, I don't know, by 50% and only make a couple of billion profit a year. Geez, they'd be sad, wouldn't they?
I know. What would they do if they couldn't make their obligatory 9 to 10 billion a year? I mean, what?
Imagine if they only got $1 billion,
Imagine that.
$1,000 million profit after tax.
But you know, here's the funny thing about that, right? Is that majority of that money is monopoly money. It's all made up.
Yeah.
Because of fractional reserve banking.
Yeah.
Even if 15% of us, for example, just to pluck a number, even if only 15% of us all went to the bank at the same time and said, I want my money, they'd be screwed. They couldn't do it.
Yeah.
They couldn't do it because they don't hold it. Right? It's all lent out and recreated into other fictional money. It's just a...
I needed to withdraw $30,000 a few years ago. Right? And I wanted it in cash. They said, can you take a bank check? And I said, no, I need cash because I was buying a motorbike, right?
Yeah.
And just one of those things. So the first time in my life I had some money in the bank and I wanted to pay cash.
Yep.
I wanted it in $5 notes, but they wouldn't give it to me in $5 notes. Right?
Of course you would.
Yeah, I did. If they had $1 notes, I would have taken them. But they wouldn't give it to me in $5 notes, right? But it was $30,000 or $32,000 exact. It took 48 hours.
Yeah. Yeah, that's right.
It took 48 hours before I could get the money.
Yep, that's right. And look, and if you're trying to get out any more than about 10 grand, don't expect to get it instantaneously.
No, you can't.
It requires planning. And the worst thing is they put you through the third degree around what are you doing? Why are you taking this money out? What are you spending on? It's like, hang on, this is my money. I don't need to tell you what the hell I'm doing with my money. Go to hell. It's like...
But I couldn't believe it took me 2 days to get the money.
Yeah, no.
I'm like, seriously? And they're like, you're a bank. And this wasn't one of the little banks.
No. They're all the same.
Commonwealth Bank.
Yep.
One of the big 4. Yep. And they couldn't get $30,000 in less than 48 hours.
Mate, this is why I'd prefer to have my bank in my hand. All right.
I'm just going to rob the bank. Hang on.
Good try.
I crack myself up all the time.
But you can't. I've got my facial recognition happening. You can't.
Stacey, your phone would see this face and go, oh, wow, let me in.
You keep hanging on to that dream, my friend.
Oh, mate, I've got to hang on to something.
Well, on that note.
Ladies and gentlemen, thank you very much for joining us for our daily crypto update. Please excuse once more my voice. I promise it will eventually come back. And hopefully my chest will do so I can actually breathe properly.
We can only hope. So if you want more of that information and more in-depth stuff, come and join us at patreon.com/2crazyguys1crazyworld and join in the fun. And as Chris mentioned yesterday, showed you, we have 2 promotions happening at the moment. We've got the silver subscription, which will get you a silver Litecoin.
And don't say it yet, I'll come to that.
Okay, sorry. I should have a drum roll. A silver Litecoin, look at that. Beautiful. And if you go up to the gold subscription, you'll get a gold Bitcoin. Look at that. So
I did go scuba diving. I found one.
Good work. Well done.
It's actually probably a really safe time to go swimming.
Why?
Well, the sharks are too busy eating crypto. All right. On that note, ladies and gentlemen, have a wonderful day. This is 2 crazy guys in one crazy crypto world saying we'll chat to you tomorrow. See ya.
All right, guys. See you later.